It's Black Friday, which is expected to be the most exciting shopping day of the year. But is that still the case for the in-person experience? According to Mastercard's Holiday Spending Pulse, total retail spending is expected to rise 3.7% over the holiday season. But this will be mostly driven by e-commerce, not in-store sales. So, is the mall shopping experience dead? Oh, that's grim. Here with the latest trends is Steve Sadove, who is the Mastercard Senior Advisor and former Saks CEO and Chairman. Steve, great to get some time with you here this morning, and a happy Thanksgiving weekend to you. First and foremost, when you think about some of these trends that you were able to pull out of this Pulse Insights here, what is the first thing that really perhaps comes to mind for you that gives us a sense or kind of tells a story about the consumer?
Well, great to be with you this morning. I think when I look at the numbers, it tells me that we have a healthy but cautious consumer. The consumer's spending again, 3.7% growth is real growth. The inflation rate is about, let's call it in that low 3 range right now. So the consumer's getting essentially flat unit growth. And that's where we've been over the last couple of years. If you look at pre-pandemic, you were seeing 3 or 4% growth, so that we're back to that kind of growth. You had very inflated growth a year ago, but inflation was 7 or 8% growth. So I think the consumer is spending, but they're being very cautious. Value is an important word. They're spending, as we all know, a lot more on experiences and less on stuff. The e-commerce business is healthy again. We had a period during the pandemic when everybody was just shopping e-commerce. You had this massive growth from about 12% to 18 to 20% of commerce in being done online. That then slowed down dramatically as the world opened up and everyone wanted to get back in a store. Now we're into what I would call a more balanced growth. Prior to the pandemic, e-commerce was growing a bit faster than stores, and that's the experience that we're seeing right now.
So, Steve, how are retailers adjusting, and those that you think are best positioned at this point, what have they done in order to maybe advance their business or adapt to some of the shift that we've seen from consumers in their spending trends than some of their peers?
Well, I think there's a lot better control of inventory right now. We had a dislocation of inventory during the pandemic. The early pandemic winners ordered much too much of the products that were selling well. And you now have the basically reversion to the mean, and everybody is having a better understanding of what is selling. Inventories coming into this holiday season are relatively lean, which means the promotions are going to be there, but they're going to be a little bit more controlled. If you go out there at Black Friday today, you're going to see discounts, but they're going to probably be in the 25-30% range as opposed to some of the very deep discounts. Little bit of wait and see. This is a very big day that we're out there with today at Black Friday, but it's not just about one day anymore. Consumer is shopping anywhere, anytime they want to be able to shop. Tech is doing well. Experiences continue to be very strong. Things like restaurants have been killing it. And right now, people are shopping a little bit less at for example, at the higher end, luxury jewelry, largely because experiences are doing so strongly. But again, all of these are a convergence to because some categories won early on. Everyone looks at a Home Depot, not an individual company, but hardware, home related types of companies did very, very well during the early stages of the pandemic. They're comping much higher numbers. So what I'm seeing is a balance going on, but the key word being value. The consumer is very much focused on that. They're also focusing on what I would call peaks and valleys in the season. This was an early season. You started to see promotions starting early in mid-October. You're seeing big promotional pushes. So I would expect a big peak this weekend. And through Cyber Monday, you'll probably see a valley as you go out of that week, and then a big push probably the Saturday before Christmas and then after Christmas. This is a long holiday season. This is the best calendar for retailers in terms of the number of shopping days. So again, I'd see a lot of promotions, but what I would call planned promotions on the part of retailers.
Steve, given your background as former Saks CEO, when you see a consumer environment like this where we've continued to talk about or hear about trade downs among the consumers and looking for discounts, as we've just discussed here. Does that type of environment make for a high value, high cost nightmare for some of the most luxury goods producing companies?
Not necessarily. I think that you've got to look at segments of the consumer. The lower end consumer, low to middle end consumer is much more stressed. They've been having to deal with the lack of government payments, support payments. You now have loan repayments. I think that we've had the excess savings that are being drawn down. So you're seeing much more in the way of the trade, what you're calling the trade down, or making choices among that consumer base. The high-end consumer, I always saw it as being very tied to how are the markets doing. That consumer is really quite healthy. They're making choices in terms of whether they want to buy more things or whether they want more experiences. You've seen a very big uptick in the last year of travel, hotels, cruises, things like that. So the luxury goods market has slowed. Clearly overseas, China has affected that to some degree. But in the U.S., I don't see a major trade down among the luxury consumers. I think it's a matter of choices for them.
All right, Steve Sadove, always great to get your insight, especially on a day like today with Black Friday. Mastercard Senior Advisor and former Saks CEO and Chairman. Thanks, Steve.
Thanks.